Alright, so let's discuss when is the ideal time to enter a stock. First, we'll take a look at what the average trader does. Now, using this example here, this is a recent trade of mine, BA, which is Boeing, the jetliner. You can see it's in a tight consolidation here. Now, what is the average person going to do, or the average trader? Now, of course, you got to remember we're looking in hindsight here, so just imagine that this chunk of the move hasn't taken place yet. So we're working from here to here. What's the average person going to do if this right here is all we have to see? Well, the average trader is simply going to look for a breakout above the previous resistance. So in this example, previous resistance is 246.40. So your average trader is going to put an alert right there for a breakout, and then when that breakout occurs, they will then go long. Now, there's nothing wrong with that. It's a fine strategy. Personally, it's not what I do, and here's why. The main thing is that a lot of breakouts fail. It's kind of that simple. You see this right here, try to break out of there, it failed. A bunch of failures in here. So as a general statement, a lot of breakouts fail unless you're in a really good market environment. And quite simply, we're not in a good environment right now. So rather than waiting for the breakout, what do? So shift our focus over here to the 195-minute chart. Let me expand that for you. Alright, so got our 195-minute chart. This is my favorite chart. I use this to gauge all of my entries and exits, and for those of you who don't know, 195 minutes is half of an entire trading session. So these two bars right here is one entire day, and yada yada. So we had Boeing here in a nice squeeze, and let me just eliminate some of this noise right here. And let's see, what else can I eliminate? Just really want to clean this up. Alright, so here we go. We know we want Boeing. It's in a nice squeeze. What's your your average trader is going to do? They're going to wait for the breakout of the squeeze. They're going to monitor this all week, and they're going to wait for this to happen right here. Volume came in, the stock broke out, and they're going to go long here on this bar right here. Now, in the example of Boeing, this was a successful breakout, and it made a pretty nice move, and looks like it might be losing some steam now, but if you entered here on the breakout, that's a nice trade. Now, myself, personally, here's what I prefer to do, and this is nothing new. I learned this from John Carter, who is an options legend, so this is not, my creation or my idea. This is something I've taken from him and made it my own. So we got Boeing here in a squeeze. I know I want to go long. Rather than waiting for this breakout to occur, because a lot of them fail, instead what I'm going to look for is a good bump in volume on the 195 chart, which you can see right here. And that's where I'm looking to go long. Now, ideally, it's going to be somewhere, in the middle to upper range of the squeeze, but, if you're willing to sit through some potential, back and forth, you could go this low. So I bought pretty low here in the squeeze, but again, a lot of selling volume, stock kind of quieted up, and then boom, big increase in volume here, and I entered BA right on that bar. So here's the key differences. Rather than waiting for the breakout when all the buyers are here, when everybody wants it, I took my position in here, in the quiet, but again, my entry was tied to that volume bar. That's the institutions coming in and slowly building their position. And you can see that taking place within the squeeze, That's institutions, That's institutions. And the reason being is that when you manage, billions of dollars, you can't go take an entire position size in the stock at once. There's not enough shares available. You simply control too much money. So instead, what the big boys on Wall Street do is they chunk into their position. So what did I do? I bought here in the quiet, and again, my confirmation for an entry was that bump in buying volume. You can see that there was a demand for the stock that day. I got in. Over the course of the next few days, the stock began to rise, and then, as we got here, up towards the top of the squeeze, that's when the whole party started. That's when all the buyers came in, and then the breakout occurred, and it pushed the stock out very nicely for a beautiful trade. But, you know, it might look deceiving on a chart, but the difference between the profit from here to there and from here to there is huge. So this is what I look to do. I look for an opportunity inside of the squeeze. I look for that first sign of some increased buying volume, and then I take my position. Why is this good? For one, I'm buying in the quiet. I'm not buying in noise. I'm not risking, you know, buying on a potential failed breakout and having it come right back in my face. Two, the second reason this is so great is, guys, you know, especially with options, I'm in here at 235. Doesn't break out until 245, another 10 bucks. You know, on the options, a move from here to here, you know, some from 235-ish up to here before the breakout even happened, that's a big profit. You know, potentially, depending on the options you get, you're looking at, you know, a 50 to even 100% return if you buy in the mid or the lower part of the squeeze before the breakout happens. And that's huge. You know, I'm up 50, 70%, and then everyone and their mom comes in because they're running breakout scans. They see Boeing's getting ready to break out. You know, then the general masses come in and they gobble up the stock. And that is just literally the completely ideal situation for me personally. I'm buying here in the quiet, coincided with the big volume, and that's likely when the big boys on Wall Street are starting to take some positions. And, you know, another thing I learned from John Carter is that if you can nail this and get in early in the squeeze and then the breakout occurs, you can easily start taking some profit because you're already up handsomely, you know, as the breakout is happening. And he calls, you know, feeding that to the ducks. You know, if you go to a pond or a lake with a, you know, a bag of bread, all the ducks are going to line up and they're going to want that shit. This thing breaks out, everybody and their mom wants to accumulate shares. Well, here's me, here's T over here. I'm already in, I'm already got a pretty profit. So when this breakout occurs, you know, I'm ready to lock in some profits. I might close a quarter, you know, or a half or a third of my position and let the rest run while everybody else who bought here on the breakout is just barely starting to get a profit. So that's huge. You know, I'll repeat those reasons again. One, it helps you avoid buying on the breakout, which oftentimes turns and fails. And two, it allows you to get in early with the institutions so that if that breakout does occur, you're already at a great profit and you can just, like John says, feed your profit to the ducks, you know, to the general average Joe trader. And that's huge. And one more thing to keep in mind is that, you know, you get in here in the lower part of the squeeze, damn, you know, this thing could fail a breakout and turn, and you could close up here, and you still got a profit. You know, anytime you can profit on a failed breakout, you're going to make a lot of money over time, guys. So, you know, BA was a great example of that. I'll go back to a trade of mine from, I believe, July. I took this on vacation. This was a quick 130, 140% profit. Again, I knew I wanted YY. It's in a nice tight squeeze. Rather than waiting for this breakout, what did I do? I waited for that real buying volume to come in, and I took my position right here on this bar, you know, in the upper range of the squeeze. You know, with that volume, and the timing on this one was just phenomenal. You know, the very next day, the big volume came in, and then the breakout occurred, and, you know, and I was already up, you know, decently, nice profit before this great move started. So that's huge, guys. You get in here quiet while the institutions are building their position. You can see signs of it, you know. Volume increase here, volume increase here, volume increase here. It finally gets that breakout, and then every trader on earth is coming in who runs a breakout scan and is accumulating shares. And, you know, and this one went on for, you know, weeks. You could have just slowly kept feeding your profits to the ducks. A good recent example of this is MTW. Again, this is a nice setup in a squeeze. Had I waited to take this on this bar when it broke out of the squeeze, you know, I'm sitting here with a pissy little profit right now. However, instead, I got in on that bar right there in the squeeze, coincided with that increase in volume, and it went right up from there. So by the time the breakout occurred, I'm already sitting with a very nice profit. So one way to look at it is like, you know, if you get, you know, in the mid or upper range of the squeeze and it works and then the breakout occurs, it's almost like two trades. You know, I get my profit from the move out of the squeeze, or inside the squeeze rather, and then, you know, it's like throwing gasoline on a fire when the breakout does occur, and, you know, your profit just rises even more so. You can see the same thing going back a bit in MTW. If volume is our indicator, you know, that it's time to enter a stock, why wait for this? You know, why wait until it breaks out? Look at this bar right here. And look at the volume. It already expanded, guys. You can enter here. By the time this shit takes place, you're sitting pretty with a 50, 100, 200% profit on your options. And that's exactly where we want to be. And then, you know, you can quarter your position, close a quarter, and then hold on to the rest, you know, however you choose to take profits. But again, guys, it's like a whole nother entire trade if you can get in early before the breakout occurs. It's huge. Again, look here at Google. Google's been in the squeeze. It's a stock I wanted. Had you have gotten in the top of this bar waiting for that breakout, it immediately failed. You're immediately at a loss. However, if you're monitoring the squeeze in Google, and you see this volume increase right here, let me get that. Come on. Okay, let's be in a prick. But you see the volume increasing here. You're watching Google. It's a stock you want in the squeeze. That's a good amount of buying, guys. It's a lot of green bars. You could have gotten in on one of these bars, and guess what? If you held that all the way up here, that breakout fails, you still got profit from those 4 bars right there. You can sell right here, and really if you timed it well and got in on one of these bars with the volume, you could still be holding this thing all the way to over here, and you wouldn't have even taken any harm. You know, you'd be break even right now. So again, you know, everyone's going to time their entries and their buys a little bit differently. It is just my preference personally to monitor the squeeze, and, you know, regardless of where it is in the squeeze, I want to see a volume confirmation before the breakout. Facebook, this is a great example. 1, 2, 3 failed breakouts. So if I'm a trader who likes to trade breakouts, I'm watching Facebook here for the breakout. It's in the squeeze. Come on, come on. Looks like it's going here. I take a position. Failed. I take a loss. Looks like it's really ready to go this time. Fail. Loss. And again, and you guys get the point. However, if I'm on top of my game and I'm monitoring the squeeze, look at those 3 bars. That's some good buying happening, guys. You get in on one of these 2 bars, guess what? Regardless of these failed breakouts, it never came back really to test your entry. And if anything, you close for a profit or you close for break even. You know, look at everything that's happened in the market last week. We've had 1, 2, 3, 4. Call it 4 or 5, you know, failed breakout attempts on the 195 for Facebook. That could have been 4 or 5 quick losses in a row. You'd be getting irritated. You'd be saying, F Facebook. You know, I don't want to trade this. It's shit. It's junk. All that stuff you start telling yourself. However, if you're on top of your game and paying attention, and you wait for that volume in the squeeze, guess what, guys? You enter here, failed breakout, we're fine. Failed breakout, we're fine. We're still at a profit. Failed breakout, we're fine. We're still at a profit. So that's something to keep in mind. Pranil said it pretty perfectly earlier, you know. The pros don't buy the breakouts. You know, the pros are taking profits on the breakouts, selling that to, you know, your average Joe trader, and that's not what you want to be. So focus on the inside of the squeeze, and you don't just want to buy inside of the squeeze blindly. What do you want? You want that volume confirmation. So again, MTW turned out to be a very nice trade. I took a small position, but I identified the squeeze. That's what it starts with. You identify a proper setup. You then monitor the squeeze. I like to use the 195. And then all I'm doing is being patient, sitting on my hands and waiting for that volume to come in. It happened here, mid-range of the squeeze, perfectly. By the time that breakout happened, you know, today's breakout was actually kind of weak. It broke out and then faded right back. I said, hey, you know what? I'm happy with this profit. I got in really nice. I'm going to take it. While everybody else who waited for the breakout today, you know, all those junkies running their breakout scan, there may be, you know, break even at a loss. Who knows? So, just a quick recap. You find a setup you like. It starts with the daily chart. You then use the 195-minute chart to monitor the squeeze, and then our cue to go long is true strong increases in buying volume, regardless if that's at the top, the mid, or the bottom of the squeeze. Try to avoid the breakouts. If you time this right, you get like 2 great trades in one. You eliminate the risk of a failed breakout, and then you make, the average Joe trader your best friend, and you just feed those ducks. You just feed those fuckers repeatedly, BA, I took half profit here. You can do it however you want, but your options are just so much stronger when you time these entries, a little bit better rather than waiting for, your typical breakout. So that's something to keep in mind, guys. Focus on the setup in the squeeze. And look, until that buying volume came in, there was no reason to buy Boeing. Nothing going on here. Nothing going on here. Boom. Party started. Wall Street's accumulating shares. Let's get in with the big boys. And then let's get out with the big boys. Something to keep in mind, guys. Maybe you can apply some of this to your own routine, and I think you'll see great results from it. Enjoy.